Forex Fortune Hunters, welcome back. Tom Wilmot. In today's video, we're going to quickly recap some of the adjustments we've made to the indicators and templates that we have on our Dropbox file. And many of you have taken advantage of the offer of free Metatrader indicators, and you can get those from Dropbox simply by shooting us an email over at fxfortunehunter.com. In this video, I'd like to detail some of the template ideas as well as the adjustments we've made, and I'd like to introduce a new indicator to you, a special version of the MACD. So hold on to your hat. We'll get started right after this. Okay, guys, just quickly, we're recording this video on December 4th, 2019. I've got a chart of the pound and the yen on the wall here today. And in the last few days, it's become clear to the pollsters in Great Britain that Boris Johnson is probably going to win the parliamentary election coming up on the 15th, I think, of December, I believe. And as a result, the pound has really begun to get some legs. And you can see here a significant day of upward movement. This is Wednesday, the 4th of December. So, in any event, our Super Gimmick template is a very basic one. You don't need anything fancy to put it together. I have pulled together in the Dropbox file my medallion template for the crossover of multiple moving averages. And notice here that we have some chop during the Asian session on early Wednesday morning, early this morning, and even into midnight yesterday, Tuesday, Boston and New York time in any event. Then we had a little pullback here and then a quick thrust higher, a move to the north, a pull back into the bands. And if you'd been trading through the U.S. session, which started here about 7 a.m. Boston and into the New York Stock Exchange open, you'd have had a very nice move to the north. Now, you can usually see, if you take a look and check out my book, the amazing Zeelander Flytrap Forex trading system, you can see that this kind of a pullback or kind of stabilization or consolidation often is a continuation pattern, and in fact we got a nice move to the north. I usually like to wait until we've got a pullback into the bands, which would have been in this area here, and then you can adjust your stop loss levels if you're going to enter in that area, and you might want to put it, for example, right in this position here. This is the 30-80 EMA, and many of you know 12, 16, 20, and 24 EMA are my standard bands. Okay, so in any event, on the Dropbox file, which you can ask to have access to simply by shooting us an email, and the link to the blog page is down in the description of this video. Anyway, here's the upward medallion. This is the Wilmot Cross that's been around now for 10 years, amazingly enough. How time flies when we're making pips. Anyway, I've put this template back together again because I've added to it a neat version of the MACD, and it changes color for you so that you can tell, once again, you're kind of in this uptrend, even though we had this consolidation and this move to the right, just kind of a steady consolidation of price at that in the London exchange. London time frame rather, we can see we just continued higher until we then began our pullback. And you can see here, oftentimes you don't want to necessarily wait for the first white bar for an uptick here. Oftentimes, because there is a delay in all indicators, you're going to get that first thrust higher on a downward trending bar. That's the same thing that happened here. And then notice, let's make this a little bigger actually. We'll get it bigger for us. I'll put our bar here just so we know where we are. We'll come across here. Notice that as we're pulling back here, when we begin to get these upticks, we begin to see these thrusts higher, you can very easily enter the trade at that point. Now, this one is actually approximately the same level as our first white bar, so you could wait for this. But here we have no sound, no sense that we're going to be falling off. We're going to be, driving downward through any of these support levels. In fact, it looks to us like we're about to have the recovery that we're looking for. So any of these areas, even before the first white uptick, is a perfectly decent entry area, and your stop loss is minimal here. So you've got a risk reward. We've got 11 pips here, even down to our original stop loss area. You could make it 10, no problem. And with that kind of risk, you'd be looking for at least 20 pips, 2 to 1, maybe 3 to 1. And notice up here, we're in the 60 pip range. So we had a really nice move at the beginning of the U.S. session. And, anytime you can get a 6 to 1, your account values are going to be moving upward and to the right. So that's the situation. Now, this particular indicator, the MACD, is a version that I found on the internet years ago, and I've kind of customized it, but I don't actually have the original Metatrader MQL4 code, even though it was public domain stuff. Bottom line is, I wanted to get the correct colors here for you, and so as a result of that, I've incorporated that into a template called Super Gimma. So if you download the indicator and then add the Super Gimma template, it will put you in a position to see these colors as they are right here. So now we'll go down and let me show you how it looks to the downside. If we're in that other area, you can see here we have the same thing. We have a little bit of a pullback and then a downward thrust, and this was also good in the early part of the session for a nice move to the south. 19 pips here on our 5-minute chart, and then backing up. This was the day before when we had the sell-off on Wall Street, and so here was another nice move, 47 pips, and you can see these pullbacks here give you a chance to notice that you're going to be getting in at this point to the south, and the pullback and the coloration of this MACD, I hope, will be helpful to you. So that's just a quick update. Please check out our website and ask for those free indicators if they'd be helpful to you. Please like our videos, once again, if they give you some insights you haven't had before. And comment, please, freely, and tell us whether you're on track with what we're doing or whether you'd like another kind of pair or another kind of template discussed. So, meanwhile, let's get some pips, guys, and thanks for watching.